ETF Investing for Beginners 2026 Guide. Imagine walking into a grocery store with only $50. Instead of buying just one item, you buy a basket filled with hundreds of different products. If one item becomes worthless, you still own everything else in the basket. That's exactly how ETF investing works. And today, I'm going to show you why ETFs have helped millions of ordinary people build wealth, even if they start with just a few dollars. Let's get started. What is an ETF? ETF stands for Exchange Traded Fund. Now, don't let the fancy name scare you. Think of an ETF as a giant basket of investments. Inside that basket could be hundreds or even thousands of stocks. For example, instead of buying shares of just one company, an ETF allows you to own small pieces of many companies at once. Imagine buying a basket that contains companies like Apple, Microsoft, Amazon, Google, and hundreds more. If one company struggles, the others can help balance things out. This makes ETFs one of the simplest ways for beginners to invest. Why most beginners should start with ETFs. Many new investors make the same mistake. They try to find the next big stock. Maybe they buy a stock because someone on social media says it will explode. Sometimes it works. Most of the time, it doesn't. The problem is that betting on one company is risky, but ETFs spread your money across many companies. This is called diversification. Diversification helps reduce risk. Instead of relying on one company to succeed, you're investing in an entire group of companies. That's why many financial experts recommend ETFs for beginners. You don't need to be a stock market genius. You simply invest in the basket. How ETFs make you money. There are two main ways ETFs can make you money. First, growth. As the companies inside the ETF grow over time, the value of the ETF usually grows too. Second, dividends. Some ETFs pay investors cash regularly. Think of dividends as a reward for owning part of the fund. Many investors reinvest those dividends to buy even more shares. Over time, this creates something incredibly powerful: compound growth. Your money starts earning money. Then that money earns even more money. It's like a snowball rolling downhill and getting bigger every year. One of the biggest mistakes people make is waiting too long to start. The earlier you begin, the more time compound growth has to work. 3 popular ETFs for beginners. Let's look at 3 popular ETFs beginners often consider. First, VOO. This ETF tracks the S&P 500, which includes 500 of America's largest companies. Second, VTI. This ETF gives exposure to almost the entire US stock market. Third, SCHD. This ETF focuses on companies known for paying strong dividends. Remember, these are examples, not personal financial advice. Always do your own research before investing. The key lesson is that ETFs allow you to invest in many companies without having to pick individual winners. How to start today. Getting started is easier than most people think. Step 1, open a brokerage account. Step 2, choose a beginner-friendly ETF. Step 3, invest consistently. Even $10 or $20 per week can make a difference over time. The secret isn't investing a huge amount all at once. The secret is consistency. Small investments repeated over many years can become surprisingly large. ETF investing isn't a get-rich-quick scheme. It's a get-rich-slowly strategy. But for millions of investors, that slow and steady approach has worked. If you learned something today, subscribe for more beginner-friendly investing videos, and I'll see you in the next one.